The magic of the weekly vertical crossover. I'm going to cover with you guys the potential profits that the weekly vertical crossovers could have given you up through July. It's now the 30th of July 2019, so we got one more day, but I went ahead and cataloged everything and I'll break it down for you. I have new people who tune in all the time asking me, what's the exact entry point? What's the exact exit point? How much money can I make? You guys know we're not a stock calling service. We're an education company. We provide free everyday daily market reviews of the 4 ETFs that we chart. That's the S&P 500, the NASDAQ 100, 20-year bonds, 20-year treasury bonds, and gold. We are not a stock calling service. We're not going to give you entry and exit points. I will not do that. I am not taking responsibility for that. We want to educate you, though, so that you can learn how to read these stock charts, and you can apply what we teach not only to the 4 ETFs that we review, and there's a good reason we review those 4 and pay attention to them all the time. You can apply that to any stock or other ETF you're interested in. But we want you to understand how the charts work and understand the magic of the weekly vertical crossover. Those who don't know what a weekly vertical crossover is, you're really newbies. Weekly vertical crossovers are when the price percent oscillator crosses over the red signal line on our charts. Listen to us any day of the week. If you're not a subscriber, go to chartingwealth.com for free. Put in your email address and your name, and you will receive the daily market reviews 4 days a week. The weekly market review 1 day a week. You'll also be privy to the special trainings that we upload in that email and only to that email every single day. Now, let's talk about weekly vertical crossover. There is real power and magic in those things. It is the biggest wave we typically look at. Yes, once a quarter we do look at the quarterly chart on the S&P 500 because it is trackable. But on a routine basis, we are looking for weekly vertical crossovers, either up or down. You will see figures where it says down. Those of you who are new to everything are going, how can you make money when something goes down? Why would you buy the S&P or SPY, which is the S&P 500 ETF? It tracks that basket of 500 stocks. Why would you buy it when it's going from 283.57 or 283.58 down to 275.24? We're not. We're looking at something like SH, which is an inverse fund. We have a great training at the website and at the YouTube channel called Inverse Funds, How to Make Money When Markets Crash. It explains them. They move opposite of the underlying equity. In this case, the underlying is the S&P 500. SH is in Sierra Hotel, SH. That is an inverse fund. The Qs has an inverse fund also, PSQ. TBF, I believe, is the inverse for bonds. Gold is a little harder. The reason is there's a big spread between the bid and the ask. Although, now, any of these, particularly on gold, if you're going to short gold, you might be forced to do a put in that regard. And I'm not going to jump into the middle of how you deal with options. Working on a new book on options. We have our current book, of course, available in its 11th printing. You'll see a link in the show notes for that. But I want to go over with you what we have seen happen and how I set this up. I used to do, those who've been with me a long time, a couple of years ago, I would do like a once a month survey of a summary of what we had done that month. That was a lot of work. This was a lot of work today to put all this together for you because I had to go through the charts. I had to pull the entry point, and this is the way I did it, okay? I did it this way. The entry point is the close on the Friday that the weekly vertical crossover occurred. You might say, why didn't I do it on Monday morning, which is typically when we look for the entry point? Because I wasn't going to spend 3 or 4 hours looking for when we actually got in on a Monday. And in fact, you know what I discovered while I was doing this? The entry at the end of the day on Friday might even be better than Monday. Isn't it fascinating when you pay attention to things and you go out and do some surveys and do some summaries of things? Looks like perhaps, and again, we're going to be experimenting with this going forward, maybe right there at the end of the day when we know it's a weekly vertical crossover on a Friday, that might be the smartest point to jump in, because check this out, my friends, and I want you to check out what I'm saying. Never take anything anybody tells you in any kind of stock training, in any kind of investment, financial advice or anything. Never take it at face value. Check out the numbers. And if I've added anything wrong, figured any kind of percentages wrong, correct me. I am happy to have you do it. But this is the way I did it. I went on Friday, I took the last price on the weekly vertical crossover. I did the last price for the week, okay? That's where I got the 264.48 on the 25th of January, 2019. It was for an up move, as a weekly vertical crossover going up. I then used the last green candle, the high of that. And you might say, well, who's going to be able to guess the last green candle? What am I supposed to do? Where am I supposed to figure it? You want an average? You could do that. But I just went with the last green candle that we had, not waiting for it to cross over going down, because when you start getting red candles, you know that things are changing, and I wasn't going to wait and lose that profit. Not going to do it on a crossover going down, so I chose something, and I chose the high. That was on the last green candle. That was on the 3rd of May, 2019. It went up $30.47. It went up from $264.48 to $294.95. That was an 11% gain per share. 11%. Now, those of you who deal with options, you can only imagine what your options return could have been, depending on if you were in the money, out of the money, you were just flat. But imagine what the gains would have been if you were out of the money. Just insane kind of return. So again, this is not trading advice. This is just giving you what the charts have shown us, okay? That's what the magic of the weekly vertical crossover did, an 11.52% gain over the course of, 4 months? Not bad. Now, let's look at that week, that crappy week we had were just a down week. One down week, then it turned back over pretty quickly. Check it out. 283.57, and then the low was 275.24. This would have been an inverse trade, a profit of 3.03% or $8.34. The next was getting in on the 28th of June up through the 26th, and that was the latest high that we had. It was $9.20, and of course, a 3.13% gain. Not bad. Now again, you notice that none of these are losses. The weekly vertical crossover gave you the ability to make at the least a 3% gain, at the most a 11.5% gain on just the S&P. Now we see even bigger profit potential in the Qs, which is my favorite. That's the NASDAQ 100. I love it. Every dollar is a strike price. If you're looking at options and just like the S&P 500, these are super liquid. Now, we've got great trainings on liquidity. Just did one on liquidity. If you were a subscriber to our daily market review, you got that. And in fact, I think I just made it public. So check that out. Understanding liquidity. If you're in some closed-in fund where it costs all this money, or you're locked out in some type of hedge fund where you can't get out without huge surrender fees, you're giving up liquidity. The nice thing about the S&P 500, the NASDAQ 100, 20-year bonds and gold is they're liquid. They're a few pennies between the bid and the ask. That's very, very liquid, almost as liquid as a dollar. So that's very good. So what do we see going on? Well, again, our jumping in point was the 25th of January. Jumping out point was the 3rd of May. That was where we had our last green up candle. Got in at $163.79. The high, $191.32 for $27.53 a share, or 16.80%. You know why I like the fall-winter trading zone? Bingo! There it is right there. The fall-winter trading zone is beautiful. Great jumping in point and great profit. Unbelievable. Then we had a down move. That started on the 24th of May, 179.54 down to 169.27. That was $10.27, a 6.07% gain. PSQ is your inverse fund to have captured that. Now again, not saying it's those dollars because PSQ is a lot smaller than the Qs as far as price goes. Same percentage, okay? If you had bought the same dollar amount, your percent would have been right there at just over 6%. Now we go to the up move. That occurred on the 7th of July, and the 26th was the highest green up candle. And what we saw was 190.29 to 195.55, or $5.26, or just under 3%, 2.67% in less than a month. And again, what we saw, 524.19 to 607.19, that was a nice 6% gain in a very short time period. TLT, you guys have been paying attention to that. We just had a weekly vertical crossover going down at the end of last week. And again, I'm recording this on the 30th of July. So we had an up move going. It actually started back in October. So what did I do? I picked the last price for the week in January, 121.77, and where it peaked out on the last green up candle, that was on the 5th of July. That was from 121.77 to 134.29, $12.52, or a 10.28% gain on 20-year bonds. That was the longest running one I guess we had, and that was, what, 7 months? 6 months? 6 months. So again, 6 months for a 2.28% maximum possible gain. Not bad, my friends. Let's look at gold. Gold, again, it had already crossed over going up in the prior year. I know this one was back in October on TLT. This might have been in December. Anyway, I did the same thing for the entry point, 121.39. The last green candle up on the 22nd of February, 127.21, for a gain of $5.82, or 4.79%. Not bad for almost 2 months, actually less than 2 months. And then what do we see for the down move? Gold rotated over going down, weekly vertical crossover going down, 123.35 down to 119.34 for $3.81. And again, that was over the course of about a month, a little over a month. And that was for a 3.19% gain. And like I said, that would really have to be done through a put. DGZ, the kind of inverse funds there, just a whole lot of spread between the bid and the ask, not worth the risk. And so again, we're going to be teaching on options in our next book. So that is coming. But you can always play around and practice with them. Remember, we're all about practice trading. None of this is about real money. This is about you practice trading, you using your trade worksheets, which I'll make sure also are attached for free along with the daily market worksheet and the weekly market worksheet. Those PDFs will be attached to this recording. I'll make sure they're in the show notes. Lastly, gold up on the 7th of June at 125.46. And again, popped to its last green candle high, 136.63, $11.17 over the course of just a little over a month and a week, and an 8.90% gain. Folks, these are the results of the weekly vertical crossovers. They are magic. They are unbelievably helpful. They are simple to see. I beg you, spend 10 to 15 minutes a day with us. Learn what we have to teach. Keep it simple. We keep it idiot simple. Why? Because simplicity works. As Einstein said, make everything as simple as possible, but not simpler. And we have tried to make it as simple as we can, applying Occam's razor. We so appreciate you being with us. This is what we're all about. This is the bottom line of what we do. Weekly vertical crossovers and the potential profits you can have through them. They are unbelievable and exciting. You want to know more about what we do? Again, go to chartingwealth.com, sign up, buy our book, Charting Your Way to Wealth, in its 11th printing. I'll send you an autographed copy. You'll see a link for the book in the show notes also. God bless you, my friends. Let us hear from you. CW@chartingwealth.com is the email. chartingwealth.com is the website.